So if you're following Greater Boston commercial real estate sales trends, one of the things that you should know is that the market has certainly pivoted, and the transition happened about 90 days ago. So I'm going to walk you through what's going on in the market for the second quarter 2024 update. We can take a look at the commercial real estate sales trends and help you to understand what's happening, why it's happening, and what it means for you and your portfolio. So to start out, we look at the $1 to $100 million commercial real estate sales market for Middlesex, Essex, and Rockingham counties, comprised of retail, office, industrial, and flex buildings. And when we look at these, we compile the data going back to 2006. This allows us to see the market cycle and where we are today in relationship to prior years. In looking back over the last 18 years, you can see that the long-term average for commercial real estate sales for the greater Boston area has been 454 buildings traded per year. That's all three counties, Rockingham, Essex, and Middlesex, combined for $1 to $100 million. What you will see that's quite interesting is our 2024 annualized number is 344 transactions. This is the first time since 2014 that the number of buildings traded will be below the long-term average over the last 18 years. So if you've been wondering why there aren't as many transactions happening, you're not hearing about a lot of deals, this is why. There have only been 194 year to date, and it looks like there will only be about another 150 for the rest of the year. So this then leads us to the next question, which is what is happening with the year-over-year change in velocity? If we look at the year-over-year change from what's projected to be the end of 2024 over the end of 2023, you'll see that there's a negative 30% year-over-year change in volume. So that basically says this year will be 1/3 slower than last year. And last year was 1/3 slower than the year before. So that adjustment from 22 to 23 was a 30% slowdown in volume, and then we're seeing another 30% slowdown in volume this year. So cumulatively over the last 2 years, we have a 60% reduction in volume. Comparing that to the great financial crisis of 2008, 2009, that's not quite as bad a slowdown as we saw in 1 year. In 1 year, it was a negative 78% slowdown. That was a drastic reduction in volume. And that volume went way down. So what we're seeing here is a slowdown. It's a relational slowdown to the cost of money. Okay, so if we look at the 10-year treasury going back to about 1990, you'll see here that we're still relatively low at 4.3%. But if we look further back in time to 1960, we seem to be reaching a point where we might start to stabilize. If we trend this out on an average, the average is about 5.8% or 5.3%, in that range. So right now we're in that low fours, and there's no telling whether that's going to go down or go up. But based on what we're seeing from the Federal Reserve, we're seeing discussions about maybe 2 cuts this year, maybe 3. If that happens, we would expect that 10-year Treasury dividend rate to come back down and to put a little bit of stimulus back into the market. So that could push the volume up a little bit if that 10-year Treasury average yield does, in fact, come down some. Comparing the year-to-date volume to the long-term average, you'll see that we're at 194 transactions for the year, 1.183 billion in volume. Comparatively, over the long term, that volume is somewhat low. So the long term is a $2.8 billion volume. And again, that's not adjusted for inflation. That's a year-by-year sales volume. So you would assume that assets trading this year are priced higher than assets that were trading 10 years ago, and you would then assume the dollar volume would be up. But what we're seeing is the median and average price per deal has come down. So we're seeing a higher frequency of lower value deals in general than we are higher value deals, which historically would prop up that volume number. On a pricing basis, the average price per square foot for 3 of the 4 assets is trending down. Okay, retail, office, and flex all trending down. Industrial is the only asset class that we're seeing a bounce up in average price per square foot pricing. Comparing that to the national picture, a little different here. So nationally, Green Street is telling us that the peak at May of 2022 to the first quarter of 2024, we had a 22% adjustment in pricing. Okay, that has bottomed out in the first quarter, and the second quarter we've had the beginning of an early recovery where pricing is up 1 to 3% nationally. Now this is taking into consideration all asset classes: retail, office, industrial, lodging, net lease, student housing, apartments. Okay, so we look at the national kind of picture to benchmark our market. I think the stabilization coming into the market is reflective of sellers and buyers beginning to agree on pricing, and some lenders coming back into the market and starting to lend on deals. So I see this as really beginning early signs of stabilization in the market. Sentiment-wise, the sentiment has been somewhat volatile over the last 12 months. We had a pickup in sentiment in the end of 23. That dropped back off in the first 2 quarters of 24. So looking at sentiment through the end of May, it's kind of trending down again. I'm anticipating in our quarter 3 review this is going to pop back up. So let's take a look at the asset class of retail. Retail has been kind of one of the bellwethers in terms of volume, and it looks like it's going to make up about 50% of the sales transactions this year, just like it did last year. Popular asset class, it's done very well over the past several years, and it's expected to continue to do well as long as the tenants in these properties can weather this inflation pressure and continue to perform and generate profits on the space that they lease. So we're anticipating this year to see about 181 transactions. Not going to be a record year like 22 was, but it's a strong asset class. In terms of pricing, we're seeing an average price per square foot of $268 a square foot. Okay, that's come down somewhat off of that 2021 peak at $325 a foot. I see this primarily as an adjustment to lending rates and the opportunity to move money into the bond market or CDs where you can make 4 or 5% on your money. If you're moving money there, then you might be sitting out on retail. But if you're seeing retail is adjusting to draw capital, it seems to be doing that and performing fairly well. Dr. Glenn Mueller, in his forecast for retail through the second quarter of 2025, still shows Boston retail in a very strong position in the market, continuing to be a high performer. The industrial market. We are seeing a volume correction in the market. However, we're seeing a return of higher quality industrial product coming into the market, which is what's bringing that average price per square foot back up again. But we are seeing volume that's somewhat off, from 2021. 2021 was a very, very busy year for industrial. 22 as well as 2020. But we're now starting to see that level back off. Typically, our market sees about 90 deals a year, 95 deals a year on average. So somewhat of a volume correction there. This is mainly due to seller sidelining, buyer sidelining. We have buyers that were out of the market for all of 23 who are now coming back into the market and looking to pick industrial back up and put those assets back in their portfolio. On an average price per square foot basis, you can see industrial volume here, pricing at $188 per square foot. And also maintaining a fairly relatively high position in the market cycle. Mueller has us moving into the first stage of hypersupply. And this stage of the market is where we start to see some continued deliveries of industrial buildings coming into the market. I do see that we've had several projects completed, but we do have projects that were permitted that have not come out of the ground and are not likely to come out of the ground as tenants have pulled back and demand has waned somewhat for industrial space in the market. Still very strong, occupancy still very strong, but we are in fact seeing some softening, the early signs of some softening in the industrial category. Office, it's about as bad as you think unless you're buying small office buildings in the suburbs. Those buildings are maintaining very healthy pricing. A lot of them are being purchased by users, and you have investors also buying small multi-tenant office. The durable services in the suburbs, like legal, insurance, real estate, medical, those are all doing very well. It's the large floor plate office buildings and the urban office buildings that are really, really suffering. It's also suffering from a case of having a bad rap. Lenders trying to get away from it, investors seeing it as too risky. These are very classic characteristics of a market that is at the bottom. And in fact, you'll see here the volume is bottoming out to great financial crisis levels, 2008 and 2009. So if you're selling an office property, it takes a little bit of resolve to work through the market and work through buyer expectations on these properties. If you're a buyer, you may be scared of office, but if you understand the asset, the demand for the asset, and quality of the asset, great. It's a great time to buy one. This is one of those things where people often say, I wish I had bought a certain asset class when it was at the bottom of the market. Well, here your average price per square foot for office right now is $141 a foot, and Mueller's got us at stage 1, which is coming out of recession and into the very first stage of recovery for office. And as that ramp up occurs here, this is where the money gets made in the market cycle. So that's something just to keep an eye on as you watch the market. If you are considering selling, there are buyers still buying this product. They are still buying office. If you are looking to add office to your portfolio, as long as you're comfortable with the asset class and how it performs, could be a great opportunity to pick up some value. So if you have questions about your property, your portfolio, how to best position it in the market today to make the most amount of impact for your wealth, be happy to have a call with you. You can request a consultation with us. You go to our website, which is mansardcre.com. The top right corner of the site, you'll see a button. The button says request a consultation. We'll schedule a call together, take 10 or 15 minutes. Be happy to answer any questions you might have, ask you some questions about what you're trying to accomplish. And if you think it makes sense for us to talk further, we can make the arrangements at that time. So thanks for watching the video. I'm glad you checked it out. Please subscribe to our channel here whenever we post these videos. That way you'll be notified when we publish them, and we can keep you up to date on the trends in the greater Boston commercial real estate market. Again, I'm Jeremy Serrier with Mansard. Great to see you. Take care.